Good afternoon, everyone, and welcome. Thank you, David, for putting up this amazing event where we get together and we get to answer a lot of your questions, a lot of the concerns or that you may have for stocks or futures or any trades that you may be interested in. So for those of you that do not know me, my name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com. I have been a professional independent trader focused on equities and futures for the last 20 years. I specialize in trading futures in the first 2 hours of the day, and I swing trade stocks. I actually started my career swing trading, investing stocks, and then I literally wanted to navigate into full-time trading, and then I became a full-time day trader. I was day trading stocks for more than 18 years, and then I incorporated futures trading for simplicity, based on the recommendations that I have received from my financial planner and also from my accountant. So it has a lot of advantages. I have been running a swing trading service for stocks, the Stock Swing Trader, since 2010. So for over 12 years. And I also run a futures trading room since 2017. This is the newest addition to our program. We offer trading education for stocks and trading education for futures, for swing trading, day trading, and investing. I focus on high velocity moves, whether I am swing trading, investing, whether I am day trading. So let's get started, everybody, but not before you guys tell me, where are you dialing in from? So tell me where you guys are from. Where you guys are from. All right, I am going to answer lots of questions. Clearwater, Florida. I actually live in Boca Raton, Florida. I'm in Michigan right now, so I still have some. Wow, Detroit. Awesome. I am in Detroit, Michigan as well. I was just saying that I'm in Michigan right now. I'm going to stay here, spend the holidays, and then I'm going to go to Florida in January. Hey, everybody. Hi. All right. Awesome, guys. Okay, so let's get started. Okay, so I see already a question here, and I think that this is one of the most important questions that I have received in a long time. What signals do you look at before entering a trade? I am going to answer that question from the day trading standpoint and also from the swing trading standpoint that you can actually apply as well into investing, because I do like to invest at inflection points as well. So even if you have money and you say, hey, you know what, I have like $500 or I have, let's say, $500,000 and I want to start investing, you can invest with any amount. You can invest with $50, you can invest at $100. It doesn't matter the amount that you have. It's the most important thing is start investing, but just don't throw the money into the market. Just look at some inflection points. I'm glad, because we could talk about that topic. So we're going to get started right now. Okay, so any account size, Randy, you can have any account size as long as you position size. You could trade, for example, in my trading room where I trade futures, you can trade micros, or you could trade full size depending on your account size. So you could have, let's say, a $7,000 account size or a $5,000 account size, and you could still trade futures. That's the beauty about it. And I think one of the most important things that whatever you do in trading is position sizing. So I highly urge you, we have entered into the period of very high volatility. The volatility is just going to explode going into midterm elections. We're going to talk a little bit about that and the possibilities that may come up right after the midterm election. And yes, volatility is going to be through the roof. And typically, as we're going into Christmas and into the end of the year, volatility is just going to get higher in December, because we have a lot of things that are going to go on, right? We have the quadruple witching option expiration. We have the contract roll. We could possibly have a Santa Claus rally. Let's see if we're going to have that. And we also have window dressing, and we also have January effects. So we have a lot of phenomena that are happening into December, and therefore you're going to have a higher volatility than into the rest of the year. But let's get started, everybody. Let's dive in, and let's just start with a little bit of review of the energy market, because this is very hot right now. We're seeing the prices that are actually soaring, and there's a lot of interest in energy, right? And one of the things that I also look at, and some of the articles that started to come out more aggressively this week, just because we're approaching election. Everybody's talking about the energy prices that may go so the energy sector and the stocks under the energy sector that may have a rise right after the election. So I really don't like to speculate on these elements, but I was just reading an article yesterday, and several articles this morning and a couple of days ago, I believe. And some of them, were pointing out towards a Republican plan for the House, and that would benefit all of these energy stocks. Oh, so for that reason, so here is what I plan on talking about today. We're going to talk about energy. We're going to talk about futures, crude oil. We're going to look at gasoline. We're going to take a look at heating oil. We're going to take a look at natural gas. We're going to take a look at some stocks, and I will go through some of the patterns that I look for. What is the signal? I love that question. What is the signal? What am I looking for? And I can walk you through some of the trades that I did today. I can walk you through some of the trades that I did yesterday, and long and short. So you could see what I was looking at, and you could see my train of thought. All right, so let's get started with the first thing on our agenda, which is crude oil. This is the crude oil futures. This is a daily chart. And what I typically do is I navigate toward a really higher time frame. I always start my analysis top down. So even when I'm day trading, I'm always taking into consideration higher time frames, because these are they have some levels based on which we may have a high impact for the trading session, or in the future, or sometime in the future. All right, so what do we have going on right here in oil? And this is a monthly chart. So basically every single candle here, if you're very new to trading, represents 1 month of trading activity, literally 1 month of trading activity. I'm going to go ahead now and show you something that probably, not a lot of traders look at. And I do look at quarterly charts. Okay, so every single candle here represents 3 months of trading activity. You're going to get some of the most explosive moves off of these charts, but you're also going to get some really nice inflection points from which the price can rotate at, or resistance areas for that matter. So this is a quarterly chart where each candle represents 3 months of trading activity. We have just started this candle right here in the month of October. We have just 1 month yet. We have 2 months to go until it closes. But it's very interesting that we had a pullback within the last quarter. So we had a very bearish quarter that we have just ended at the end of September. But it was bearish in the sense that look at the technical point that we have here. So I use, for example, those of you guys that do not use moving averages, just a heads up, I do use moving averages in my trading analysis. And the reason for that is that a lot of algorithms and institutional traders use it. And I find that it's very helpful, and I use it to my advantage. So I just want to show you, very quickly, I want to incorporate some of the questions that you have here in the trading in the room. And one of the questions is, how do I get my signals? I get my signals by analyzing macro to micro. So one of the things that I've noticed here is that I have a big inflection point. This is a huge resistance area that we've had, and this is the 2018 to 2019 top. So I have a lot of resistance over here, and this spot is forming minor support into future price action. So you can see here that once the price moved up, it pulled back into the, sorry about that. All right, it pulled back exactly into the prior resistance area. So this is actually a clue that the price may be ready to pop higher, because minor support areas are much more stronger than major support areas, for the simple fact that they have been tested before. So that means that they have been tested here. They have been digested on the push above this prior high, right, that we've had. So it had a smooth, easy transition. And then when they came back, when the price came back to this prior resistance, now support. From this point, this becomes an inflection point from which the price can actually start moving higher. I love minor support areas to look for long correlated trades that may have the possibility for a continuation higher, for a strong continuation higher. These patterns that are developing from minor support areas deriving from pivot highs can only happen in very strong uptrends. Hence, you could see that we have a rising 10 exponential moving average. We have a nice fanning out of the moving averages, which means that the trend may be setting up a progression higher. So therefore, from the longer standpoint, we're not seeing any kind of pressure to the downside, at least not now. And I don't think that based on the current chart pattern and based on the narrative that we're hearing from the media, from the analysts, from the lobbyists, that are definitely planning for for some changes, we're not seeing an attempt at a push further lower. Okay, so you have to pay attention from all aspects. So with that respect, the analysis on the quarterly chart still sustains a higher price action. So with that being said, this is the time when I'm going to the monthly, right? Okay, so on the monthly, we have 1, 2, 3, 4. Now, when I first started day trading, obviously, I pay attention, I learned a lot of technical analysis. And one of my mentors actually told me that, hey, if you know how to count to 3, if you know how to count to 4, if you know how to count to 5 or 6, you know how to trade. And he was absolutely right, because the price is always pulling back into a sequence of 3 candles, 4 candles, 5 candles, or 6 candles. So when you're getting a pullback of, for example, 1 candle, that is not a pullback, that is a pause in momentum. When you're getting a 2-bar pullback, then that is going to be a shallow pullback. When you're getting a 3-bar pullback, and that applies to any time frame, whether you're day trading, swing trading, or investing, you can expect and you can plan for a rotational pattern if the asset that you're looking at is into a trend. So here we have a 1, 2, 3, 4 pullback into the 20 simple moving average. And guess what? We also have, again, a very interesting formation. Guess what? We have the prior pivot high that is also forming a pivotal support into a very interesting minor support zone. So from this point, we had a trigger higher last month. So this candle where I'm holding my cursor represents October activity. And you can see that October was pretty much came in with the trigger above the prior high. We also have a range that was developed between September and October. So anything that trades above the October high is going to see a push higher, going into perhaps 110, 120 from the technical standpoint into these prior highs. Now for the downside, I'm not very excited for the downside from the technical standpoint, and that is because we do have a flat 200 simple moving average. Now, if you don't know what a 200 simple moving average represents, well, it represents the daddy of all moving averages. Typically, stocks and ETFs, if you're trading commodities, if you're trading indices in the future, if you're trading, for example, Forex or currencies or bonds or anything that even cryptocurrencies, you know that when the price visits or revisits a 200 simple moving average, the 200 simple moving average tends to push it back. It has a trampoline effect. So when the price comes, for example, into a 200 moving average, it has the tendency to bounce. Okay. So from this standpoint, this is actually a bullish pattern. Now, when you're looking at the current level that we're trading at right now, you can see that we're trading back into the trigger high, and this is from the September highs. But we're still respecting the September lows. So now the fight is going to be between where the 20 SMA, the rising 20 SMA is at, because it's a rising 20 SMA. This is the blue line is the 20 simple moving average, and the price actions are literally trying to push a little bit higher. And we're also fighting the 10 EMA. Now, I don't know how many of you guys know, but whenever the price is caught in the moving average web, because sometimes the price is getting caught like the way it is right now, sandwiched in between the 20 SMA and the 10 EMA, the price action tends to gyrate. So it tends to create that pendulum effect, back and forth, back and forth, back and forth. And this action can be seen, for example, on a daily chart, can be seen on an hourly chart, and sometimes can be also seen on a weekly chart that we're going to move in just a second. So I'm providing a little bit more information about the technicality and how I decide to enter the trades, and my train of thought, whether I'm looking for a short or long, and or what I can expect throughout the trading month or throughout the trading weeks. It's always a great idea to plan ahead for these trades and set up the levels, have a pre-plan already in place. So when the trigger happens, use alerts. So when the trigger happens, you're ready to take action. So because the price action is trading in between these two moving averages, remember what I said at the beginning, these are algorithmic rich zones. When the price is going to start poking above, and actually when the price is going to stay above the 10 EMA, that is when it's going to get more traction to the upside. However, once the price is going to start trading below the 20 SMA, and this is without having the candle close, so I don't have to wait until the end of the month, because I would have to wait a whole month. But when the price action trades more below the 20 SMA, that is when it's going to get more bearish action. But it's bearish in the sense of, yeah, day trading, but not swing trading bearish. Why not swing trading bearish? Is because you have a, kind of like a full spectrum of support levels underneath. You have the 200 SMA, you have the 50 SMA, plus you have this whole entire congestion over here. So the price has been going back and forth within this area for quite a long time, and it's quite possible to revisit over here. So this is forecasting for the trade. All right, so then after I perform my analysis on the monthly, I go on the weekly. So if you're on the investor side, those would be the signs that you're looking to get long. And if you're on to, for example, the swing side, where you're holding positions anywhere from 2 days to 2 weeks or a month, then you're going to go to the weekly chart. The weekly chart has a lot of resistance, as you guys can see. We have a lot of tops from the left-hand side, and these are from August, a lot of congestion into August. And then the price came back up. This is actually the first week of October and the second week of October. Both weeks we have revisited these prior highs, and we actually started to pull back, right? Remember what I said earlier about one bar does not represent a pullback, and there's not literally represent a signal to buy or to sell. And this is the perfect example right here, where you can see the price that is just gyrating back and forth. What else do you guys observe here? Well, we are trading a little bit above, and this is this week. We're trading a little bit above last week's high, and this happened yesterday when we had a little bit of rally over $90. So over $90, we have room exactly into this 10 EMA. Remember that this is going to be a strong gyration zone from the 10 EMA. This is where you have lots of odds of stopping out, and a lot of traders will, will say, hey, you know what? I had a perfect buy set up, and I have a buy set up. It triggered above the doji. It pointed higher, but the price got stuck, let's say, into $90 and $91, and I wonder why. Well, it's because of these moving averages that are affecting price price and because of the resistance, this chop that we're trading to the left-hand side. So remember that within this Y range, these are weekly bars. This represents 1 week of trading activity. So within these weeks, we had highs, we had lows, we had higher highs, we had higher lows. And we had all sorts of patterns forming here. And this is the reason why we're having this chop right here into the $90. Bottom line, if the price escapes over $95, this is going to be the velocity for the upside. So learn how to look at a bigger picture and, try to risk your money when the pattern is into the clear. You want to trade into a tradable void. The tradable void is when the price hits just above the highs, can't sustain the highs, and then it has room without any interference from any other pivot chops, and it has room to progress higher. Now, from the daily standpoint, let's go into the daily standpoint. What do you guys observe here? So since making a low, right, the price action has made an effort and has digested all these MAs and has triggered higher. When it pulled back, it rejected on making a new low, therefore creating a brand new pivot high, right? A higher low. So we have a low and we have a higher low. This is sustainable, and this is the clue that the price action may be getting ready to continue higher if the price is not going to get back in here and reject the 81 area and therefore going back into the $75. So at this point, the pattern is moderately bullish. It's not completely bullish because it's still trading below the daddy of all moving averages, the 200 simple moving average. And remember, higher time frame traders, investors, institutions love to trade with the 200 in sync. So that means that they see bullish action, especially on the daily, especially on the weekly, when the 200 simple moving average is below the price. That is giving it, buying pressure. So when the price is going to hit this spot, if it's going to hit this spot at one point in time, it will have velocity for the upside. This is going to be the big unleashing. So this is going to be open the doors. We're going higher. This is going to be the time when you're going to be looking at all those energy stocks. We're going to be looking at USO potentially for a continuation higher. But even at this point, you can see the grind. I'm expecting this grind to be intact and literally not escape higher until after election, or we may have a breakdown, or we may have a breakdown. But that's going to be, like I said, probably after election results. We're going to see how that is going to play out. But special attention to the energy sector. I can't highlight enough. This is going to be in high in play. Now, when you're looking, for example, on the technical chart, for example, for a day trade, for example, on the 1 hour chart, you're doing your market planning. You can see here that you have a double bottom, but the price is trading below the MAs. So when the price is trading below the MAs, it has more selling pressure than buying pressure, and that's why when you're looking at, for example, at taking a position, you're evaluating, and basically the price right now is in the core of the trade. When the price is trading between support and resistance, and we're trading smack in the middle or anywhere within that range, the odds for your trade, for the success of your trade, are going to be 50-50. So what that means is that if you get a trade, you have 50% chances of making money, but you also have 50% chances of losing money. So that doesn't represent a high odds trade, right? When you have high odds trade, you either have to take it into a continuation pattern, or you want to take it into a pattern that has that tradable void. All right, so this is with crude oil. This is very interesting. We can go back here into a weekly chart because these are very, very representative, or you could select the daily. It doesn't really matter at this point because they're very sideways. But I just want to mention something that is strong today, and a lot of people are not paying attention to it, and that is heating oil. Heating oil is very bullish. So I like to look at the synchronicity between all of the commodities, for example, that are into the energy sector. So I'm noticing that heating oil is already popping up, is not waiting for anything else. It has already broken above the range. You can see here, this was yesterday's price action, and it was trading in yesterday's price action just tapped into this 10 EMA. Today we opened and we finally broke above the 20 SMA. So which means that on a day trading level, or even on a swing trading level, if let's say you did not take the trade and did not see the setup, any kind of pullback is going to be buyable, and the next target is going to be $4. Remember, $4 for heating oil is the big deal. It is a whole number. It is a big number for heating oil. And then again, if it has velocity, it could go into the 410 back into these highs. This, I love to trade patterns that are trading into velocity because you're getting traction and really less odds of stopping out of those trades. These trades are labeled for 80 to 85 success rate. So heating oil is very, very active today, and it was a little bit more active than yesterday. And once again, look at the technicality of it. And this is the 200 simple moving average that is literally lifting the price higher, right? Beautiful, beautiful pattern. And also the price is escaping into a tradable void. And one of the things that I wanted to show you guys is on the weekly. Weekly is also already perfect. You can see that the price is launching. Look at the moving averages. They're all below. This is a double bottom formation with a higher low, and this is an inside rotation for up. This is really bullish pattern with resistance into $4 and $4.10. Very beautiful setup. Like I said, this is going to have continuation. Even when you're looking, for example, on a 1 hour chart, you can see that it has these moving averages. So you can see by comparison, because we talked about crude oil. I know a lot of traders are driven to crude oil, and they sometimes don't really look at gasoline. They don't look at heating oil, where these two commodities can provide sometimes better continuation into patterns than crude oil, right? All right, because crude oil commodity is really crowded and everybody's seeing, so it's kind of like a tug of war was going on right there. But like heating oil, not a lot of attention. Gasoline, not a lot of attention when it comes to the commodity, right? All right, so here it is, huge expansion to the upside, even from the hourly chart. And what I want to show you guys is, for example, one of our preferred timeframes to trade, and this is the 5 minute. Okay, we were talking earlier about the moving averages. If you're a day trader, this is something that you have to pay attention to. For example, in the overnight, you had a very sideways price action. And once of the open here, you could see that at 9:30, right? So right into the New York trading session, indice open and stock market open, the price action started to gain some velocity. So it started to gain, and look at the volume going up, wind down, had a little bit of wind down here as we were heading into the doldrum period. And then look at the volume back again here, volume growing. So there's a lot of interest going in. So look at the technical patterns that I look for are very simple. I teach in my courses 10 trading strategies, and I apply these trading strategies throughout. One of the most used trading strategy, and in fact, remember that if you want to succeed in trading, you don't need 10 trading strategies. You just need 2 trading strategies, and that's enough for you to make a bunch of money in the market. But you have to make sure that you have it in your trading plan and you respect the pattern to the T. Because if you don't respect the pattern, if you get like distracted, or if you think, oh, you know what, I'm going to wing it, it's not going to work for you. Okay, the strategy that is most used is the 10x is the buy setup or the sell setup, whether you're on the long side or you are on the short side. So what I use is I look for a possible breakout. This is a breakout pattern. I take it over the complete highs. No, I'm not buying bottoms because I'm not a bottom picker. And besides, buying off support or shorting into resistance is not a strategy. The most important thing is to look for clear patterns that are developing in the sweet spot. So not necessarily on the top or the bottom, but look for the breakouts or look for breakdowns in this area. So here you have a combination of breakouts. For example, I just want to show you very quickly. All right, here we go. All right, okay, here. All right, good. Now I can't seem to pick my cursor. Oh yeah, here it is. Okay, so this is the breakout strategy. What I usually do is I don't typically put my stop very close, even though, you have the support level over here, right? I usually put my support zone over here. So this is how I position size. The reason for that is because I'm using this space as a cushion. Okay, I'm using this space as a cushion. And remember, I position size. you should position size as well. You should not be going into trading, any style of trading, without position sizing, because if you don't position size, remember, you're not going to have consistent results. You're not going to have consistent wins. You're not going to have consistent losses. So it's really hard, if you're not position sized, to come back from a loss. And it's going to be devastating. For example, you could have a trade, you could have a $1,500 loss, and the next trade that, let's say you take, may have another 500 loss. And then when you make money, you may have a $200 gain, or you may have a $700 gain. So you need several trades to come out from the hole that you have dug yourself into. But if you're using, for example, a constant allocated risk, for example, let's say you're using $500 per trade, then if you have a loss, then you have to lost $500. If you have a second loss, you lost $500. If your next trade is working and let's say it only makes 1 R, then you have recuperated the first loss. If that particular trade runs 2 Rs, then you have that third trade is making up for your 2 losses. So it's very easy to come out from a loss. We actually have a free video on our website about position sizing that we're going to take down next week. And if you are interested in it, you could go to my website. It is TradeLL.com, go under services. And if you have that little pop-up window, it is actually the last one. I think it's position size indicator. That is when we did the launch for a position size indicator that you can use for NinjaTrader, which is phenomenal. The feedback is outstanding for that tool. And that is only for NinjaTrader for now. We're working on a position size indicator for the Thinkorswim platform. So make sure that you tune into that. I explain exactly what you need to do in order to position size. So I always give a little bit of room. I include this wiggle room into my position sizing. This is going to be the breakout point right here. And then again, you're heading into targets. I like to use these resistance areas for my targets. I use a plethora of other strategies to calculate my target areas, but you could see how the price was attracted into the first area of resistance, and then the price pulled back. Remember what I said earlier, that when the price gets extended from any kind of moving average, the price is actually looking to pull back into the moving average. You cannot ignore moving averages. As much as you would like to trade naked on naked charts, meaning you can't, because the vast majority of algorithms and the vast majority of traders out there use moving averages. So why complicate it and say, oh my gosh, I'm going to look at this pattern and I'm not seeing it? No, this is fairly easy. It's so easy. It's just like, this is like brain dead easy. So here again, you have this pullback, and this pullback is creating another buy. You can see it right here. So it has a shallow pullback into the 10 EMA. This is the buy. This is your entry. This is your stop. And this is the next target. Here you have another strategy that is lining up. This is called a sandwich strategy. This one right here, it's called a sandwich strategy. You push it, take a look how these resistance areas are working beautifully, right? And the moving average is in sync with price. Here it's getting extended. At one point in time, the price was over here and it's getting extended from the pattern. And the pattern is coming back to visit the 10 EMA. Now, remember, this time slot over here is pretty much into a doldrum, the start of the doldrum period, right? So you can engage in this. So for example, if you take the next buy and the price is trading very close to the resistance over here, obviously you're going to put your stop at break even, right? So at this point in time, you don't have a loss, but you have a break-even trade, which is phenomenal, right? And then you're waiting for the price action to see its reaction back into the 10 EMA. And you can see that you're not getting any kind of buy setup or any kind of breakout. So in this case, you're going to wait. You wait another 5 minutes. You can see that the price action is piercing through the 10 EMA, going a little bit lower. And then here, the 20 SMA is holding and it is rotating. So this is the other trade that you should be in right now. This is another buy setup. So this is just to answer your question. So I hope I answer your question with what I look for in order to get into a trade. And this, for this strategy, I use on any time frame, any style of trading. So here it is, the buy setup here, that actually, this is the entry. This is the stop over here. This is the breakout. This is one of the targets. This is T1. and then extending higher. The next target that we have, well, it's a little bit higher than that. Let me show you where it is. Oops. Let me just clear this set, get my cursor back. For some reason, cannot. Okay, here it is. This is going to be the next target, $3.90, $3.90, $3.92. All right. So now let's get back on track and let's talk more about the energy. And this is heating well. So I'm going to get very quickly into gasoline. All right. So gasoline a little bit stronger than crude oil. Remember, these are not under the radar. Everybody is into crude oil, watching, monitoring, everybody has a magnifying glass over the crude oil. So now guess what? All right. Now, guess what? Every single other index is starting to run higher. This is a huge move to the upside today, daily. I'm telling you right now, for the record, if the price is going to get over $2.71 today, we just had $2.753. If we get over $2.71, this is going to start screaming higher to $2.76, and it's going to start moving even above $3. So RBOB really strong. All right, let's talk about natural gas, and then we're going to hit some stocks over here. And if you guys, have any stocks that you would like to throw at me, just feel free. Now, natural gas is under a lot of pressure. In the trading room today, I was mentioning that, you know what, I may be interested in natural gas next week. Okay. So from the weekly standpoint, we are trading into a massive level of support. If you guys don't see it yet, here it is. This is the massive level of support. Remember at the beginning of the session, I was mentioning that these prior highs are actually going to this resistance is actually going to form support. Here is the area where this support is happening, right? So this support level is likely to hold. Now, there's a lot of selling pressure from these MAs that are pointing the price lower. Remember, when the price is trading below the MAs, the price action has selling pressure. And when the price is trading above the MAs, then you have more buying pressure. So when we get the price to lift a little bit higher, then we are going to look for longs, but we don't have to wait that long, because what I do like is the daily chart. The daily chart has a huge consolidation right here. It has been consolidated for about 4 or 5 days. I'm not going to trade it this week. I'm not going to trade it next week into midterm elections, but I will be looking at it right after midterm elections, because this may be a play to the upside or to the downside. Actually, it does favor more in an upside than a downside, but this is a base, so anything goes. 50% chances of going higher, 50% chances of going lower. But if it trades above the high, then odds are increasing if we get a trigger over 650, because this will be confirming a higher low. So therefore, the pattern may be pushing into this next resistance at $6.80. So very interesting things are happening in the market right now. So let's dive into some very interesting stocks like APA, for example. This is the first one. APA reported earnings, and you can see here that it tapped into the 20 SMA. And wow, is this a surprise or what? I mean, take a look, guys. You cannot make this thing up. You can't. All right. So here we have pressure points from resistance. All right, here's the resistance spot. We have a resistance spot over here. We have a resistance spot over here. And surprise, surprise, well, not for us. We have minor support. Launch pad for higher. The price is trading above the 20 SMA, reacted beautifully off of the 20 SMA right here. So you can see we have low, we have higher low, we have higher low. This price can explode higher over 47.50, and then we could see prices into the $50. Very, very strong, incredibly strong. All right, even from the day trading perspective, for example, if you look at a 15-minute chart, you can see, look at this, guys. So we had an igniting move higher. We pushed back. We actually tapped into support. Look how it is. You cannot make this up. Okay. It is so easy, stress-free trading. I just love trading. There's nothing else I could do on this planet than trade. And with clarity, right? So here it is, back into support, into resistance. That is resistance. Price reacted. That 10 EMA is forcing the price higher. Guess what? The next move, If it trades over 47.30, it's going to start moving higher, guys. And this is the day trade. So day trade, swing trade, you're applying the same strategies. It's just absolutely phenomenal. All right, let's go into something else. Let's go into something, again, very interesting, COP, right? COP, take a look at COP with a new high. COP with a new high. Let's take it up from the monthly, right? Let's squeeze it a little more. Let's give it more room to see if we have anything to the left-hand side. Let's give it max available, right? Squeeze, 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 squeeze. It's trading into all-time highs, right? You guys see it? Now, a lot of you guys are asking, and how far can it go? Can it go higher than this? Is it going to go higher, or is it going to start pulling back? COP is incredibly strong at this point. And I also use, for my targets, I use fibs. So I like to trace some fibs and find out what the next resistance areas are. It's into resistance right now as we're speaking. So we're going to expect some pullback from this level. Do you guys want to see how the day trading is reacting off of the weekly level? You want to see the multi-time frame correlation at work? Boom, here it is. This is resistance. This is resistance. The velocity took it into the next resistance area. You cannot make this up. And it's going back into the 20 SMA. This is incredible, guys. Okay, very powerful stuff that if you apply it on your day-to-day trading, it's just going to be phenomenal. All right, let's take a look at some other, what interesting pattern that is actually setting up right now, but are we going to take advantage of it or not? All right, let's take a look at it here on the daily chart. Wow, this is just amazing. Take a look at this, guys. Traction, railroad traction, 200 SMA below. Institutions started to gain interest at the end of October. You could see the volume growing, and these are the institutional footprints. They're literally, look at the volume going up. So there's a lot of institutional participation in here, lifting the price higher. Love these patterns. The price is following the 10 EMA. This is an uber super trend. We start breaking above 37.50. We're launching higher into the $40 and into the $44. Do you guys want to see another interesting one that is setting up right now? Do you guys want to see it? Setting up right now. Remember, this is a breakout in the making. This is a break and it hasn't broken out yet. This is a breakout in the making. 37.50, you have to be long. If you use a stop of 34.85. Here's another one. MRO. Isn't trading awesome, guys? Trading is awesome. Trading is fun. Trading is amazing, right? Trading is awesome. All right, here's another one, guys. This is same pattern, MRO, breaking above. Here's the support. Can I stress the minor support area again? Prior high becoming support, launch pad, boom, higher, right? Where is it going? Look at this prior high. This is just, one of the targets that we look at. Again, we have a plethora of other systems where we determine precise targets along the way and beyond these highs right here. This is incredible, guys. This is incredible. It has room for $40 longer term. Beautiful, right? All right, let's take a look at something else. You want to see something else that is setting up right now and has not triggered yet, and you can take advantage of it? Let's not shoulda, coulda, woulda. Let's see some real price action. HES setting up again. Look at the beautiful pattern. Look at these energy stocks are just mouth watering. We have a high of 147, railroad track, beautiful extension higher. Look at this. And we do have here the resistance. Look how strong it is. It's trading above. So not only that minor support is holding above the price is levitating above the minor support, but the 10 EMA is catching the price and lifting it higher. You cannot make this up. Look at this. Over 145.50 is lift off time. And guess what, guys? It's going to trade. It's already trading. This is the all-time high. It's going to go above all-time highs. I have projected targets on this to go into the 155 to 163. Beautiful, right? You guys want me to give you another trade idea? Tell me if you guys want another trade idea. I make it fun It's because I stick to textbook and technicals. All right, here's another one, guys. This is going to be explosive. Who doesn't like a $3 stock? Remember, if you have a 50 bucks and say, hey, you know what? I'm going to start investing in RIG. Okay, I'm going to start investing in RIG and say, it's a $3 stock. Come on. Seriously, guys. All right, here's a beautiful pattern. This is going to be a massive, 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 massive breakout. And remember, this one has really strong potential for a massive squeeze to the upside. $4 is the line in the sand for it. If it trades above $4, it's going to $5. That's just the first pit stop, because if it starts trading above $5, $5.50 and $7 are going to be the next targets in RIG. Guys, the $3 stock. The risk is really small for this. Okay. One more. Do we have time? Yeah, we still have some time. Let me give you some really good actionable ideas. OIH. Okay. OIH. Same pattern, traction, daily chart, beautiful railroad track formation, nice base, trading into resistance. It just needs to see these are a little bit more pricey, right? This is an ETF, this is the OIH, right? But they're a little bit more pricey, but you could still find really attractive stocks like $3 stocks, $22 stock. I'm going to put a $2 stock in a few moments here. So for every budget, for every account size, right? For every risk tolerance, you don't have to trade $5,000 a share stock, or $2,000 a share stock, or $500 a share stock. No, there's one for every budget. It doesn't matter if you're trading a $3 stock or if you're trading a $500 stock. The position sizing is the same, and also the technicals are the same, right? That's the beauty about it. But of course, you get a bunch of shares if they're $3, right? All right, so here it is. We have a nice traction. Look at the moving averages. Price is trading above it, so it's gaining the velocity, and it does have room for higher. Now, this I love, again, for long-term, on any break of 314 to 314.50, we may have a short squeeze where, minor resistance. Oh, wow. There's such a thing as minor resistance. Yeah, there's not only minor support, but there's minor resistance. All right. So how do you determine that? You go on your technical chart, look at the low, draw a line. And what do you guys see here? We have prior support. And you can see that the price action, kind of like develop resistance, a little bit of downtrending resistance here. We had an inflection point. This was a good short, right? But then the price started to get above the 20 SMA. You guys see it above the 20 SMA? So that's getting institutional attention, right? And the price action is trying to hold the 20 SMA. Look at it. It's trying to hold the 20 and the 20 SMA and the 10 EMA. Breakout, right? We have resistance over here. But what do we have here? We have support and we have minor resistance. Wow. So what do you think minor resistance is? Target area, right? So it's going to go to 400. So it has $100 juice into it. How can you not love that, right? How can you not love that? Okay, so I promised you more charts. Let me see what I have on my watch list. I have NOV. I promised you a lower price stock, right? So this is $22. Okay, this is $22. And let's go to the daily, right? Because, all right, let's go daily. All right, here we go. See the chop, 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 chop here. Don't trade this chop, but trade what is evident. When you see the price action, and this goes for day trading as well, when you're looking at a day trading pattern, and if you see that the price action is trading, when you see the moving averages in the middle of price, and when you see the price action coiling around it, just toss it, go for a walk. Tomorrow's a different trading, tomorrow's another day, different trading day, whatever, just walk away. So anyways, this was like, it had literally no interest here. It had no interest even here. It had no interest here, but now it's so interesting. Why do you think it's interesting right now? because it's above the 10, above the 20, above the 50, above the 200, and you have a nice fanning out of the moving average, means that the price action is getting traction, right? And what else do you see here into the highs? Well, you see a nice base, right? 21 bucks for support, and you have 23 bucks and change for resistance. So what do you think is going to happen here? Where we're looking at the monthly chart, we're going to start looking at a monthly chart, and then guess what we see? We see the same minor resistance, right? We see the same minor resistance. So we're already trading very, very close. I mean, guys, take a look at this. This is what I teach in my courses. This is support, right? This is support. This is, let's say, the first resistance. This is the second resistance, right? But this remains support, and the price action remembers this as support. So when it breaks down, here's the breakdown. This is when you short with confidence. Okay, you can see, and this becomes your stop over here. Why? Because it's getting selling pressure from the 10 EMA, right? And this is another base that is forming. And this is another breakdown, right? And again, here you can see the price rejection again from the 10 EMA. This is your exit, right? This is your exit, right? So if you shorted it here, okay, you shorted it here at 25 bucks, your exit was around, let's say 15 bucks. I'm not going to calculate exactly right now. So from 25 to 15, you just made 10 bucks on the short. And then again, you're looking again, don't get complacent. Once the price gets a little bit above the 20 SMA, look for longs, right? Look for longs. This is a good long. This is a target. This is again, another consolidation. And look at it, right? This is resistance at 25 bucks. Again, it's that inflection point. So it has room to run into 25. It breaks out 25, then it has room into the 200 SMA. All right. Okay. So these are just some of the things that I look at. Like I said, these are, great potential trade. This is not something that, happened in the past. These are things that may happen now, or it may happen tomorrow, or it may happen as soon as next week. Here's another one I was telling you guys about: lower price. I typically love lower price stocks. I love scanning for stocks that are between, let's say, $5 and about $75. I love these stocks, but of course I do play other high flying stocks as well. I have two more charts for you guys, and then David is going to kick me out here, but I wanted to keep the theme for energy stocks, because this is such a hot team going into midterm election and after midterm election. I think we can all profit from it, right? So in this example, we have Halliburton, and it's trading above the 10 exponential moving average. It's trading above the 200 simple moving average. It's trading above the 20 simple moving average and above the 50. Nice fanning out of the moving averages. Price is looking below and saying, hey, nice safety net. Thanks so much. And market is reacting based on the Uber trend. Notice how the price got extended here from the 10 EMA. The price is either pulling back or basing, so the 10 EMA is catching up to price. Incredible. You cannot make this up. This is textbook. And then here we have a beautiful breakout just about to happen over 37.30. And then once this breakout happens, then we open up into a void of about $44. Amazing, right? Just amazing. The risk is very small, probably $5 to $6 into this trade. So if you risk $500, yes, you have the option, you have the possibility of stopping out. But if the trade works for you, have the possibility of making let's say if you're risking $500, you're going to be making $500 times 6, right? $500 times 5, or $500 times 6. Huge opportunities. All right. So this was Halliburton, and one more EOG, and then I'm going to take some questions again, but I hope I really answer your questions, because a lot of time I think it's more important to talk about technicality, about patterns, and not mostly of what I think of Bank of America that it's going to do in the next 5 hours, or in the next 5 days, or in the next 5 months. All right. This is happening now. This is happening right now. So when the price is going to get over 139, it's trading at 138.90. Over 139, it's going to do a massive breakout with a continuation higher into 45 or more. Okay. This is awesome. So I wanted to keep it on the energy theme because, like I said, I think it's very important as we're moving forward. We did NOV. We did NOV. Yeah, we did NOV. We didn't do NOV. We did NOV. We did NOV. It's trading on minor support. Look at this prior high. It is amazing, right? It is amazing. Take a look. Oops, sorry about that. All right. I messed up the chart. Okay. All right, here we go. All right, boom. All right, look at these highs over here. Okay, look at these highs over here. You have resistance, resistance, resistance. Resistance becomes trampoline, right? Nice fanning out, boom, higher. Projected target for this, 26 bucks. 26 bucks. So I gave you guys like a plethora of trading ideas from one sector. Randy, where do you put your stop on Halliburton? Let's go back. Let's go back to Halliburton. All right. Halliburton stop is going to be just below this 10 EMA. I would use it 34.80. 34.80, Randy. And I did have another question in here. When you get a chance, I would like to know a little bit more on your live trading room. I'm very interested to signing up. I have two minutes left. So the trading room is for futures only. It is, we have so many members in the trading room. The feedback is outstanding. It is a guided room. So it's actually continuing education from our course, which has won the best financial literacy tool last year for the best course, best results. And let me see if I can show you right here the results. So I can definitely, if you email me, I can offer you a lot of information. We trade 2 hours and less or less. And the program is on fire. We had some massive moves into the market, taking advantage of those moves. So I don't know. Shoot me an email. More than happy to share with you. You know, a lot of information. Okay, I'm just trying to find something here, but I don't have that time anymore. So I'm running out of time. Shoot me an email. We'll provide you more information about the trading room. The trading room price will go up. It's currently $299 a month. Next year, it's going to probably be double that. Well, if you look at the trading results, yes, it's fully worth it. So I prefer